What's going on, everyone? It's Brian, and welcome back to another segment of Brian Talks Money. If you haven't already listened to episode 1 of the Brian Talks Money show, then definitely give it a watch. Featuring one of my top partners and great friend, Blake Miller, we take a deep dive on what we expect and predict for the 2023 real estate market, and how there's going to be prime opportunities to snag deals, but only for those that are ready and prepared. But okay, before we get into today's topic, it's very, very important that I remind you that if you smash that subscribe button and turn on your post notifications, you'll never miss out on how to take on the 2023 real estate market. Okay, no, but seriously, the purpose of these videos is to help everyone understand how mortgages, money, and real estate work in your favor. Because honestly, who doesn't want to learn how to make money, save money, and invest money? Look, I don't know about you, but my goal is to create generational wealth for my family and I. So are you in or are you out? And real quick, big shout out to my sponsors, Mortgage Heroes, and my partners over at Cruise Productions for making these videos happen. And now, let's get into today's topics. Today, I want to shed the light on one of the most sensitive subjects in people's personal finances. And what I'm referring to is that scary C-lettered word that many people know what it is, but don't know how it works, and it dictates your financial life to lenders. And you know what I'm talking about, your credit. But most importantly, I want to give you a clear understanding of the importance of credit when buying a home. To begin with, lenders view credit as a crucial factor in determining the borrower's ability to repay a loan. A good credit score can result in lower interest rates, saving the borrower thousands of dollars over the life of the loan. Now, what many don't know is that lenders determine interest rates for a loan considering the borrower's credit score and credit history. Meaning the higher the credit score, the lower the interest rate, and the more favorable terms of the loan will be. Now, to improve credit, future homeowners should focus on paying their bills on time, reducing debt, and correcting errors on their credit report. It's important for borrowers and everyone in general to know about their credit, as it can affect their ability to qualify for a loan and the terms of the loan. As a future homeowner, you should regularly review your credit report to ensure that there are no errors, and monitor your credit score at all times. Honestly, knowing about credit can also help you make informed decisions when it comes to managing your finances and planning for the future. Now, to fact check what I just mentioned, let's pick it up on today's article from Housing Wire titled, "Why Does Credit Matter So Much in the Home Buying Process?" And it reads, credit can be confusing, but it can also be a huge asset going into the home buying process. A good credit score increases the likelihood of qualifying for a mortgage because it indicates to the lender that you are more likely to make timely payments on your loan. Even better, a solid credit score gives you, the potential borrower, a better chance at a lower interest rate. This might result in thousands of dollars saved over the life of the loan. But if you're finding that your credit score is more of a hindrance than an asset in your home buying endeavors, or are unsure where you stand with your credit health, never fear. There are methods to improve and maintain your credit as you move towards buying a home. The first subject of importance mentioned in the article is make timely payments. And it goes on to say, you can obtain a good credit score without first establishing credit. This can be done by obtaining a loan, a line of credit, like a credit card. If you're looking to improve your credit score, start by demonstrating you manage your credit wisely. Use it to make responsible purchases, pay the bills on time, every time. If you have a history of late payments, try to make timely payments moving forward. Bottom line is banks want to see how responsible you are with paying your debts back in time. So if you have multiple missed payments, collections, high credit card balances, this could hinder your chances of getting approved for a loan. This article also goes on and explains the importance of strategically diversifying your credit and not shutting it down when preparing to buy a house. It states, opening a new account may help build your credit. Consider a new credit card or taking an installment debt, a loan that is repaid by the borrower in regular installments. This is commonly referred to as credit mix, and it demonstrates your ability to manage multiple types of loans. If you use your credit mix prudently, it may contribute to boosting your credit scores. That said, be wary of opening new lines of credit if you are nearing or already in the home buying process. If you're in the process of buying a home, then that should be your one and only credit acquisition activity, said John Holzheimer, a former credit bureau insider. Also, if you're in the process of being evaluated for a home loan, it's also not the time to disrupt your credit picture by making major purchases using your credit. Incurring new debt could impact the likelihood of your approval. Now, did you know that whenever you close a credit account, it dings you and brings your score down? Yup. Now, the article reads, don't close out your credit sources, such as canceling a credit card just to prove you don't need them. This may lower your overall available credit. It may be more favorable to your credit profile to keep those accounts open, unused, or lightly used if you're making payments on time. At least for the life of your transaction while in the process of buying a home, avoid closing down so your scores don't get affected. Now, although credit is a big determining factor, it isn't the only one. The article goes on to mention, keep in mind other key elements besides your credit score. When a lender is preparing to loan you money for a mortgage, your credit score is a measure of reliability. The higher the credit score, the more trustworthy you appear. Plus, a higher score may qualify you for lower mortgage rates. But while your score is a vital component, it isn't the only one. Lenders will also look at your income, employment history, and capacity to take on a new payment. The loan-to-value ratio, where lenders look at the appraised value of the home in comparison to the loan amount, is also important. Now, one of the most important determining factors that the bank looks at when approving borrowers is their debt-to-income ratio. And I don't want to get into this topic too much because I'm going to be making a video just on this topic. But what I did want to share with you is what the article mentioned about improving your debt-to-income ratio. It goes on to say, your debt-to-income ratio, or the amount of your gross monthly income that goes towards your monthly debt, influences your ability to get a mortgage. In the eyes of lenders, the lower your debt-to-income ratio is, the more likely you can pay. If you incur new expenses during the evaluation period, that will be calculated into your debt-to-income ratio. To lower your debt-to-income ratio, attempt to pay off other loans and lines of credit in full. Making monthly payments towards your debt will not lower your debt-to-income ratio, only eliminating entire balances will. One strategy to employ is entirely paying off smaller loans while also making minimum monthly payments on other debt. Once the smaller loans are eliminated, put the money you budgeted for those towards paying off larger balances. In summary, credit plays a very critical role in the home buying process, and borrowers should take steps to improve and understand their credit to secure the best possible loan terms. The article finishes off by saying, don't make assumptions. If you're intimidated to start the process because you think your credit score isn't high enough, you could be underestimating yourself. You should never assume your credit scores are too low, said Olsheimer. He advises consulting a mortgage lender to see if there are loan programs that fit your credit profile. Since there are options for first-time home buyers or applicants with less than stellar credit, remember you're more than just a number on your credit score. But since credit is a concept that doesn't always have clearly defined parameters, navigating the home buying journey can feel complicated. Understanding how credit works when buying a home can be very confusing and frustrating, but I believe it's because of the lack of understanding how credit actually works. So I hope you found this video helpful and it brought you insights on what you can do to prepare your credit for your home purchase. My goal is to provide you with the information and resources to win in 2023, so if you're looking to stay informed and learn about how you can prepare to buy or invest in real estate, then smash the subscribe button and give this video a like. This year, I want to reach as many new people as possible and help them understand mortgages, real estate, and money. So the only way to do this is by subscribing and liking the video for the YouTube algorithm, and plus, it only takes a split second. Thank you for listening, and I will see you guys next week.